Hi guys, I'm Tyler Laundon, the Chief Analyst of Cabot Small Cap Confidential and Cabot Early Opportunities, and I'm here with your Cabot Weekly Review. I'm recording this on Friday, August 18th at around 11:30 Eastern Time, and as you can see, S&P 500 down, about 0.2% off the lows of the day. So stepping back here, really the big picture theme over the last 3 weeks has been the push and pull between equities and yields. Yields have been going up, stocks have been going down. That's kind of what we're going to talk about today before we get into individual stocks. But just drilling down into a couple of details here, you can see I put this handy yellow line across this chart of the S&P 500. We are right at the same level where the index was last August, August 16th, so almost exactly 12 months ago. And ironically, or maybe not, that was right when Fed Chair Jerome Powell spoke at the Jackson Hole Symposium, which is where he will be speaking again next week on Wednesday and Thursday. We'll talk about that in a few minutes. But again, kind of ironic that here we are 1 year later, and that speech last year kind of quelled any notion that the Fed was done hiking rates, sent stocks lower. This year, what we're looking for is some indication that the Fed is not only done, but might even be looking toward cutting rates in 2024 in the earlier half. So that's kind of what we're hoping for. It's really, not a given, but it's just an interesting dynamic when you look at the chart where the S&P 500 is and you line up those dates. All right, on to small caps. So the S&P 600 small cap index has not done as well as large caps this year, but it was having a nice little run. Then last 3 weeks, just like the major market indices, S&P 500, NASDAQ, Dow are down for going on what looks like the third consecutive week. Small caps up a little bit today, so doing a little bit better than large caps, but still near their 200-day moving average line. If we take a look at the VIX, it's been pretty subdued lately. Actually, if you talk to options traders, we have two here, Cabot, Andy Crowder, and Jacob Mintz have been talking about how low the VIX has been. Basically no fear out there, a lot of complacency, but that's changed a little bit over the last couple of weeks. So the VIX is climbing just a little bit, which I think, again, an indication that there's a little bit more concern out there, as we can see with the pullback in equities. All right, let's move on to yields, which, I'm small cap focused, not really fixed income person by any stretch, but you just can't ignore the relationship between yields and equities these days. So here we have the 10-year, or I'm sorry, here we have the 2-year yield. It's still up just shy of 5%, about where it's been, several times over the last 6 to 8 months. And, that's great for money market funds. But the real story has been the rise in the 10-year lately. So here we are. The 10-year has come up to about 4.3% yesterday. It's down today, and there's absolutely no coincidence that with the 10-year dropping, that the equity markets have started to come off their lows for the day. But here we see, this 4.3 level go back to last October when it was at a similar level. That's basically a 15-year high. And what happens when we get up near this level is all these concerns kind of start coming out. So talk about, default risk in commercial real estate. If those rates continue to climb, probably saw the headline as I did yesterday, 30-year highs in residential mortgage rates, north of 7%. So if the 10-year continues to climb and starts going up closer to the 2-year yield, then that gap shrinks. I mean, ultimately, right now we still have a yield curve inversion, which means that shorter-term rates, shorter-term bond yields are higher than longer-term bond yields. Ideally, we would like to see that reverse, where longer-dated bond yields are higher than shorter term bond yields, but we don't want that to be accomplished by the 10-year going up through the 2-year. We want the 10-year to come down. So in order for that to happen, it kind of goes back to the Fed and their policy and some signaling that they might be inclined to start cutting rates next year. That brings us to Jerome Powell and his speech at the Jackson Hole meeting next week. That'll be next Wednesday and Thursday. Again, that's the Economic Policy Symposium. It's certainly not a given that he's going to be indicating a willingness to cut rates next year, but I think it's pretty clear at this point that that's what the market is looking for in order to kind of, get back into some sort of uptrend and for this yield issue with the 10-year to kind of cool it. The backdrop to all that, of course, is that the U.S. economy continues to be pretty resilient, so that's good in a lot of ways, but not necessarily for a clear-cut end to the Fed's higher for longer interest rate policy. So, all right, enough about that. We spent almost 6 minutes talking about yields. Let's get on to what we all want to talk about, which are individual stocks. All right, so first up is this group. I think I have 3 of them in here. It's just this group that's just too strong to ignore. It's been these companies that provide sort of mechanical operation, HVAC, those types of services for commercial and residential clients. So here we have Comfort Systems, ticker symbol is FIX. As I said, technically building AC and heating products, market cap of $6.3 billion. And they just continue to be, stock continues to be very strong and the company continues to do pretty well. Earnings growth was 65% when they reported at the end of July. So that's one. The next one here is Primoris Services, a little bit more skewed toward construction. I'll pull up the description here. So for power plants, refineries, that type of thing. And if you actually want to pause the video, you can get a closer look here at the earnings and revenue trends on an annual basis. So take a look at that. But big picture here, just looking at the chart, continues to be very strong, just like FIX was and is. And then the last one in this sort of space is another AC and heating service provider, Limbach Holdings, much smaller company here. It's market cap of $333 million. But again, like beautiful chart. And as you can see, a nice pop after earnings on August 9th. Certainly beat expectations. And that stock has been able to continue to hold on to those gains. All right, so moving away from those types of providers, sort of a blast from the past here is Solo Brands. Kind of caught my attention. It's getting to be closer to fall. We have a Solo stove, maybe going to pull it out relatively soon here. But was checking out the chart and reading up on their earnings, and pretty decent. They're going to be going out to sell more through larger retailers. And again, it's kind of an interesting story. It's been a volatile stock, but it's always on my radar, and so I dug back into it and just wanted to bring it back to your attention in case that type of name is something that you're interested in. Solo Brands has a market cap just shy of $570 million. Another blast from the past here, D-Local, ticker symbol DLO, 5.6 billion market cap company. I'll pull up the description here. There's some risk here. It's based in Uruguay. It's a payment platform. They do a lot of business in Latin America, which for the most part has been a pretty strong region of the world over the last year. But they had a pretty decent quarter, and in addition to that, they hired a new, I think it's a CEO from Mercado Libre, who's coming in, and so that has definitely had a positive impact on shares. So a bit of a story developing there. If you were interested in that name, it's in that kind of payments space. Might be worth taking a look back at D-Local. All right, I think I have a number of software companies here. Yeah, starting with Adobe, which has not reported yet. They are expected to report on or around September 14th. So pretty decent business as most of us know. But with AI, if you want a company that has leverage to AI right now, Adobe falls into that category. It's one of the reasons I think that the stock has held up. Somebody was out with a note with it this week. I think it was maybe Bank of America, just talking about the AI potential in addition to all the other things that they're doing well. It's kind of one of those, like, you can get the AI as a bonus because they have products they can monetize right now. But if the AI thing kind of fizzles out, the core business is still doing relatively well. So that's Adobe. Look for that earnings report around the 14th of September. Moving on to HubSpot. I mean, it's another like best of breed name, market cap of about 25 billion. I think Mike talks about HubSpot. I certainly have talked about it before. You know, they have all sorts of marketing tools, CRM tools, sales related tools, software company, of course. And, you know, they had a pretty significant pullback, as did a lot of software companies after their second quarter earnings report. But the wheels did not fall off the bus here. The stock has kind of stabilized and come back. So I think names like this are kind of interesting to watch. If we can get those, if yields can come down a little bit, then maybe that gives a little bit of potential for some of these higher growth names to get going again. And I think I would probably focus on ones that, you know, maybe pulled back but are relatively stable, again, in that best of breed category. And I think HubSpot falls into that. GitLab, a little bit more of a risk profile. It hasn't reported earnings yet. A little bit riskier, I think, right now than HubSpot. Earnings should be out around the 5th of September. Just throwing it up here because the stock is back down to its 200-day moving average line. And it was a good stock. It has some AI potential. But you know, a little bit of uncertainty as to what's going to happen. But I think it's interesting that it's back right at that 200-day level, 200-day moving average level, and also happens to be where the stock gapped up after its first quarter earnings report. So looking for GitLab to stabilize there. And, you know, in a perfect world, yields come down, they have a good report, and, you know, off to the races. Next up is Datadog, kind of like HubSpot. They reported quarter was generally pretty good, but the stock got whacked, but hasn't fallen apart, coming back a little bit. I think it's right at this level here now, 93, which was support back in May and June. So if that can hold, chances are better that it can move back up kind of toward 100. AppLovin, another name that we talked about a lot during the pandemic, came public in 2021, and it was definitely a hot stock for a little while. But they're kind of in that business of, well, let me pull up the description for you, but they're in that mobile app discovery system, which is very challenging to explain unless, you know, you understand how app publishing and advertising works on apps. But basically they have a platform that helps match advertisers and app developers so that those ads can get placed so that users like you and I will click on them, and those apps will be installed on phones, tablets, whatever. So there's a little bit of a dual business there, both getting apps placed on devices as well as selling advertising on them, and also in-app purchases. At any rate, the company had a pretty good report, and they have a new solution that they've put out there that has been working really well. If you're interested in it, read up on AppLovin, because that new product does seem to be gaining momentum. And if all goes according to how management is thinking, it's just the beginning and should do really well in 2024. All right, Freshworks is another company that had a nice report in the second quarter. So they, again, I'll pull up the company description. It's kind of an engagement platform. It was developed, and company was founded in India, moved to California, and they basically they have software solutions that help customers or help businesses engage with their customers. And they are definitely doing some work with machine learning and artificial intelligence, and that's kind of why you see the pop. But after a bit of a lackluster period here for, you know, well over a year, seen some momentum in this name. I don't think it's necessarily reason to go out and buy it, but certainly if you're looking for an emerging potential winner from AI and just software in general, then I think Freshworks should be on the short list of companies to watch. I think I have one more here. Nope, that's it. I'm sorry. All right, that's it for this week, guys. Hope you have a nice weekend, and we will be back in touch again next Friday. Take care.